to see what's on the radar for Kash Pashootan, CEO of First Avenue Investment Counsel. And Kash, two stocks today. First up, Lennox International, going old school.
Old school, old is gold, and we're going to talk about a gold stock later. But we like boring here at First Avenue, and Lennox is about as boring as it gets. They're a manufacturer and distributor of HVAC, so think heating, cooling, ventilation. We need it in every single home, every single apartment building. And what's interesting about these folks, so I would say this is a conservative way to get into the space. Why? Because 75% of their revenue comes from replacing units and 25% from new construction. That matters because if a large part of your revenue comes from new construction and the new construction sector slows down, you're very much at the mercy of where we are in the economic cycle of new builds. But for these folks, 75% of their revenue comes from replacing older units. And there's some growth catalysts that are really coming to fruition here. One is climate change. You're seeing in southern parts of, for example, the United States, it gets hotter and it stays hotter for a longer period of time. So this requires larger, stronger machines to be able to operate. We're also seeing new environmental regulations. So not to get overly technical, but there's a rule in the United States phasing out the use of R410-A refrigerants for more green and friendly. And this is requiring these machines to be phased out and changed and new machines to go in. So that's another growth catalyst. And then the other thing that we're seeing is, look, these HVAC mechanical systems are big ticket purchases for the average household. And the United States, as we know, is in an interest rate cutting environment right now. And so that frees up room for families to be able to upgrade and make purchases like this. So large player, their 75% of the revenue comes from replacing, not new construction. So we like that. And then the three growth catalysts from climate change to new environmental regulation, as well as a reducing interest rate environment, we believe position Lennox well for 2026.
And do we know what drove it down there over the last year or so?
Yeah, I mean, look, I think that we've had a slowing economy in the U.S. As you know, the U.S. President Trump and the administration have really been pushing for lower interest rates because the consumer has been strapped, has been challenged with higher borrowing costs, less ability to spend, and that has had an impact on Lennox. But again, we think that we're entering in sort of the opposite environment now with so much pressure for interest rates to be cut, and we do expect rate cuts to start happening in the U.S. this year, and we think that that will be a reversal of the consumer's ability to spend on items like this.
And I mean, it's a company with a track record, right? They've gone through this before.
Oh, yeah, absolutely. And look, at the end of the day, there is, this is almost a necessity. And so they're not in any sort of new technology. It's not an if, there's no adoption here. You don't have to educate or convince the market on why they need HVAC mechanical or the latest and greatest in their homes. So from that perspective, very much meat and potatoes. And those growth catalysts are going to help it come to life in 2026.
All right. And let's sneak in Alamos Gold. What are you liking about that?
So we were talking about gold in the last segment, and I was saying that being in the commodity itself is a more conservative, defensive way to get exposure. If you wanted to go to the actual producers, I would say within the world of producers, Alamos is one of the more conservative ways to play it. So they're a Canadian gold miner. They've really built sort of I'll say a brand for operating in safe jurisdictions, the Island Gold District, Young-Davidson, Mulatos, and I always butcher the name Mulatos District. So they again, one of the things you got to watch out for these producers is where are they operating. So Alamos has, as I said, built that reputation of being in the more safe jurisdictions. That's why I say if you're looking at being in gold outside of the commodity and the producers, this is a name to consider. And look, they're doing a lot of things really well, and probably one of the most important things they're doing well is their ability to generate free cash flow. So record free cash flow in Q3 of 2025 to the tune of about $130 million. That's 54% increase quarter over quarter. So great free cash flow. And remember, we like the underlying commodity of gold. So you put those two things together, and this is a name that's definitely on our radar.